morning, good afternoon, good evening, depending on the time you're watching this video. My name is Henry, and I'm here to share a little knowledge with you on what I call the myth of demo trading. The myth of demo trading. Now, so many people have asked this question: why do I succeed in demo and do not succeed in live account? The real answer to that question is because when you're trading demo, there are so many things you don't pay attention to. But when you begin to trade a live account, your senses become very, very conscious of the things you do. And this consciousness has more to do with how you manage your trades. Okay, how you manage your trades. Now, demo, as you can see, this is a demo account. It has to do with a trader taking a particular trade and then learning a certain level of proficiency from what he or she does. Demo trading does not necessarily translate proficiency in real life trading. That is because demo has its own usefulness. Demo has its own usefulness. One of which is that demo was made for traders, precisely newbies, to acquaint oneself with the trading environment. Now, if you look at this particular chart, this is a Boom 500 chart, my favorite asset in synthetic indices. And if you have been following my videos, one of the things I kept sharing was Boom 500 is on a massive downtrend, and we can see it, that it is so obvious here. The downtrend has been quite massive. Excuse me for that. Now, the reason why I am bringing this up is because I do not want you to make the mistakes you've been making. Don't repeat that same mistake. A wise man once said, you cannot do the same thing every time and expect a different result. So what must I do differently this time if I must be a successful trader? For the sake of this video, I will share something with us. If you look at this trade, this is a running trade, Boom 500 sell. You can see the lot size. This is just a 3 pip trade that is running currently. The first thing I want you to observe is the power of leverage, and I'm going to share with you the power of leverage. Look at these two accounts. Sorry, this is a real life account and it's small. If you check this, you will see that you can see something here. It is called what? 1:100. And I'm going to log into my real life account now for you to check in something. And if you check this in, you are going to see what? 1:500. Now, somebody that is a demo trader will not pay attention to this detail. 1:100, 1:500. What is that relationship with me? Well, if you don't know the essence of leverage, you will definitely miss the things that you shouldn't miss. For instance, let me explain this practically. Okay, this is my real life account. I also have a running trade. Now look at this margin. It's giving you what? 64 cents. This is a real life account, and this trade has run for more than 20 something pips. And I'm still going to take you back to demo account for you to observe something. Now, let's look at the same boom 500, same lot size, but look at the margin 3.16. What is the difference? The difference is in your leverage. The difference is in your leverage. Demo account gives you a leverage of 1:100, while real life trading gives you a leverage of 1:500. The difference is that what you do in demo, you can do in life. But what you do in life is that the leverage of 1:500 gives you a more purchasing power. It gives you a more purchasing power. In other words, a more trading power. What you cannot do in life in your demo account using a specific lot size, you will be able to do it in live account. Let me explain mathematically. Let me go to my calculator. Live account gave you a margin of 3.16, right? Now, this is because it was what? A leverage of 1:100. Now, this is your demo, and live will give you 1:500. But what was the margin requirement? 64 cents. So if we divide this 3.16 by 5, you can see you have what? 0.63, which was what? The margin for your what? For your live account. What is the significance of this? The significance is that it will allow you to trade 5 times. Okay, let me use this one. It will allow you to risk 5 times what you cannot risk in your demo. In other words, with a leverage of 1:500, your live account has a 5 times more purchasing power than your demo account. And the flip side is that your live account is also what? 5 times more exposed to what? To risk than your demo account. So for many traders who come to trade boom and crash and they do not pay attention to this margin requirement, which is influenced by your leverage, they just trade to make profit and they don't pay attention to this detail. They end up making serious mistakes. The reason is because when your margin requirement is less than your equity or balance, that is when you can place a trade. But when your equity is smaller compared to the margin requirement, you cannot place that trade. So for a boom 500 market that has a margin requirement of what? 3.16. Of course, we all know that the default lot size we can trade is what? 0.2. So if 0.05 gives you 3.16, 3.16, it therefore means that a lot size of 0.2 will give you what? 3.16 times what? Times 4. Because 0.05 times 4 gives you what? 0.20. So you need what? 12.64 US dollars in your account as a margin requirement to trade a lot size of what? 0.20 in demo account. But that is not so. In a live account, because of a leverage of what? 1:500, you only need to divide this by 5. That means you need roughly what? $2.60 to trade what? 0.20 in a live account. Do you see the difference? So in other words, if you don't have roughly $2, call it 70 cents, you cannot trade boom 500. That is why anytime you have your balance less than $2.60, the trade will not sell through. But because so many new traders don't pay attention to this detail, yes, there is a little spike now. They come back doing what? Blowing up accounts. And what do? They have, let's just say, they have a $50 account, and then they'll go and trade 3 standard lots, 2 standard lots, 1 standard lot. Why do they do this? The reason is because they do not understand the concept of margin. And of course, free margin here also helps you to realize that when you take away your margin requirement from your balance, what you have is your what? Your free margin. And your free margin is actually your real equity. Your real equity in the sense that it is the amount of money that is needed to either add more open positions or do what? Sustained what? Currently running positions. For example, when I add a new position to this, you see that this free margin will reduce, your margin will increase. So just watch. So let me reduce it to 0.20 and let me sell. Just watch. You can see that what happened. Your margin increased to $15.81. And what happened to your free margin? It reduced. So the more positions you keep adding, the more your margin requirement. Oh, it just spiked, and this is on a negative. So that is the first thing traders don't pay attention to. What is the second thing traders do not pay attention to? Trade management. And that has to do with what? How you manage your trade. It just spiked again to 74. You can see this. Yes, so what about my current running trade? Yeah, there is a reduction. So the second thing is what? Trade management. Trade management. You need to understand how to manage your trades. I keep saying it. You need to understand how to manage your trades. And what does trade management involve? It simply involves how you hold on to your trades when they are either in profit or in what? Losses. The reason why I can trade this market comfortably, you can see when it came to that zone, it spiked. I should have exited that trade here. It came to that zone, it spiked. The reason why I can hold this trade comfortably is because number one, if you check my free margin, it is healthy. Number two, I am not over trading. Number three, even when this spike came in to be, what happened was that I can hold this trade because if this trade is going to obey the law of price action, definitely it will do what? Come down to where? This particular zone before doing what? Before the trade will do what? Give me a signal of what? Reversal. Someone else might say, why then did you now pick that zone? I'll say because if you are a very good technical analyst, you know that this is a zone that can signal a continuation pattern. Yes, this is a zone. But I am also predicting, not necessarily deciding, that what the trade might go down to this point. All right, so that is the second point I'm trying to share with you. So all right, excuse me for that. One of the things you also need to know and understand, yeah, this is on a serious negative, but you can see I have not closed the trade yet. One of the things you need to know is that when you are demo trading, you don't, losses may affect you, but not like it will affect you when you're trading a live account. So I am too sure that for some new traders, if they were to see this type of negative in their live account, they would have rushed to close it. But when you're trading demo, one of the things you do unconsciously is that you allow losses to run. Yeah, you allow losses to run. The reason why we do that is simply because in demo we are dealing with what? Virtual money. In demo we are dealing with virtual money. But if by paraventure this were to be a live account, a newbie would have closed this trade in this loss and accepted it without paying attention to what price is actually saying here. Yes, they may not really pay attention to what price is actually saying. Reason being that if you look at it again, the market has been on a downtrend since yesterday, a massive downtrend since yesterday. It moved more than 200 pips. Kudos to those who took the trades. And then from this trend line, we get to realize that this is the first zone, and I am only predicting, like a weatherman will predict the weather of the day. I am not deciding for the market. I'm only predicting that there is a probability for this market to come down to this zone. Yes, there is a serious probability, and then if possible break that zone. How do I know this? Because when the market is on a downtrend, there is something the market makes. It gives us a price structure of this nature, where this is our lower high and this is our what? Lower low. So when the market gives us such a structure, what happens is that the market, once it's on a downtrend, is that the supply here will definitely take out what? The support zone here. So it will break it and then make it go down and give us a retracement and then go down again and then what? Break this zone. So this could be likened to our what? Lower high, and this can be likened to our what? No, this could be likened to our lower low. This point, sorry for that. This is our lower low and this is our lower high. So if this is going to respect price action, what will happen? This lower high, the force of supply here will break what? Demand here. For that reason, I am not what? Closing this trade. Now, one of the reason why this is so possible is simply because I did not over leverage. I did not over leverage. I did not over leverage. So let us watch and see how this trade turns out. Just a continuation of where we stopped. You can see what I said. The trade that was on a serious negative of $4 run back into a profit of what? 9 cents, and the negative of what? Reduced. And this is because, like I talked to us about understanding market structure, we can see that it is playing out as I said. Now, if you want to understand if you want to understand how trend trading or market structure works, I'll suggest you go to my channel and listen to the video price action trading strategies for boom and crash. I took our time to talk about that. Also, you can read my publications on Motivation African, why boom and crash traders quit trading. That will help you a whole lot. Now, so far you can see that the market has run back almost into profit or entry price. Yes, all of them are now back in profit. And like we said, there is a probability that zone will be what? Will be taken out. And once this zone is taken out, the market will be running back down to this zone here. Alright. So let us just be watchful. I may not make the video last till the market runs to this zone, but definitely that is what price action helps us to understand about price movement or market movement. Creation of lower highs and lower lows. We succeed in taking out of what? Lower lows in a downtrend and higher highs in an uptrend. All right. To add or to lead to the conclusion of this video, I always suggest that when you challenges, you should seek for knowledge. And I wanted to say that most of the publications you will need on boom and crash are currently on article forms. Yeah, currently on article forms. I write and publish in Motivation Africa. This is the blog I publish. So if you need publications to read on boom and crash, you can go to Motivation Africa and then read on it. And this is one of my publications I published a month ago, how to trade boom and crash without fear. And there's even a video that I've uploaded on that is about less than 48 hours, so you can watch the video. More so, I wanted to understand that in trading all of these concepts, number one, demo trading helps you to acquaint yourself to your trading environment. What do I mean by that? When you acquaint yourself to the trading environment, it helps you know where to place your sales, where to place your stop loss, your take profit, understand candlestick patterns, understand line charts and bar charts, and the rest of the other icons in your either MT4 or MT5. Number two, it enables you to get mastery of your trading strategy. Now, for some people that are price action traders, it enables you to understand the trend. For some people that are indicator traders, it enables you to understand your indicator, how it works and how it does not work, where it works and where it does not work. Now, because demo trading is a myth, it is not completely true, it is not completely false, because it is a virtual form of trading. You need to understand that it does not guarantee success in real-time trading. That you are a successful demo trader does not mean you'll be a successful real life trader. There are things you need to understand. There is a serious translation, there is a serious change, there is a serious how do I call it, change from in real life trading, because in real life trading your money is involved. Number two, a good emotional management during trading. Demo trading will not give you that. In real life trading, your emotions are hyped, they are heightened. And if you don't understand how to trade without fear, how to trade devoid of greed, how to trade devoid of panic, you're not going to make it in the market. There is no 100% guarantee in this market. Forex is purely a game of probability, and if you're going to have a good win, then you must be on the side that understand what works. And this will help you avoid the 90-90-90 rule that says that 90% of traders lose 90% of their money within 90 days of their trade. Number three, demo trading will shape your understanding of what works and what does not work. Like I keep saying, there are so many strategies out there on YouTube, Instagram, and many other social media handles. Please find out what works for you, and what works will come a long way in determining the kind of trader that you are. Are you a scalper? Are you a swing trader, a day trader, a position trader? Find out the kind of trader you are, stick to it, and find out the strategy that works well with that particular trading style that you want, that you choose to trade with. With this simple knowledge, I wish you the best of the day. Have the best of the day, and may God continue to keep us in peace and perfect blues. So you can see our trade is still running. Congratulations to us, and for people that held that trade, congratulations. But more so, understand this and understand this. Okay, now look at the spike again just took place. So why is the market really dancing there? Because that is the zone. But nonetheless, the price will not continue to go down. So that is all. I have to stop here for the moment. Have the best of the day and the best of the time. See you. This being the case, I would say you watch out for the continuation of this video on how to trade boom and crash without fear. So let's call it a day here. I remain M1 Henry. If you know this video has been helpful to you, please subscribe to the channel Juve Trades, and you can as well share the video with your friends. God bless you and have a great time.